we're going to kind of go through again my session on projecting targets, but we're going to do it real fast because that's going to kind of be incorporated into why we should be analyzing or having the targets incorporated into our whole analysis of what's going on. So there's a couple reasons real quick for why you have why projecting targets are important. First of all, you want to see if the trade is worthwhile. Secondly, you want to see once you get to your target area, you get a little more diligent as far as watching for a reversal signal. Now, because targets we can use targets such as the moving averages. The moving averages basically have truisms, and that's obviously if a moving average is reached as a support, they'll usually come back and test it to see if it's going to act as resistance. And then the other hand is once a moving average is reached as a resistance, they'll come back and test it to see if it's going to act as a support. So anytime we see a trend in progress, that's why people say, well, what's your target? Where do you think it's going to go to? I say, watch, see what happens at the next resistance level. So if it used the 50, came up through the 50, used it as support, the next target is probably going to be the 200-day moving average. If it pulls back and starts back up again and goes through the resistance level, then they usually come back and test it as support. Now, I say usually, I'm saying this fairly quickly, that is a definite, I want to say a definite truism. That's what human nature does. Once a support level is or a resistance level is breached, they come back and act as support or try to see if it's going to act as support. We have the advantage of seeing very quickly whether that resistance level is now going to act as support based upon the type of signals we see there. Now, these patterns have the truisms, and again, this is a blue ice failure, where they come up, they use a support level, and then they breach the support level. They come up, find that it's going to act as resistance. They're going to the next target, which is the 200-day moving average. And the advantage we can have to see what's happening at those support and resistance levels is what type of signals do we have there. In this case, it was a huge morning star signal, making what? The 50-day moving average or next target. So we have a much bigger advantage. Let's see, is that my audio? Is everybody else getting poor sound, or is it just a few people? Okay, all right, so it might be each individual. So if I see a trend and I see a reversal, I want to see if that reversal is a full-scale reversal or just a bounce back up to the first potential target, and then we can see what type of signals. In this case, in a shooting star, told us exactly what was happening at this level. They weren't going to go through the 50. Probably the downtrend was still in progress. So the moving averages act as magnets, and that's very simple. If you're a major money manager and you like this stock and you decide right in here that you're going to be buying it, but you see it's drifting back, where do you think you're going to wait to see if it's going to act as support? Probably that next support level, the 50-day moving average. So that becomes the target to watch to see if you're short, to start covering, and or if you're ready to buy, look for your buy signals at that level. Once it hits that target, that's where we have the advantage with candlestick analysis to see immediately what's going on in investor sentiment when it gets to that level. So we can use the information that's built into the candlestick signals as well as using the other indicators such as our T-line, that if we can see there's been a change of investor sentiment, now what are we looking for? What is our next target? Well, we want to see what they're going to do at the 50. If they breach the 50, what's our next target? We're going to see what's going to happen when they get down to the 200. And if they reverse, where do you think they're going to come back up to? Come back up and see whether the first support level that was breached is going to act as resistance. And if it does act as a resistance, then what happens? We're heading back toward the next support level. So that becomes our target. Those become obvious, not obvious, those become the assumed targets, and we can see much more clearly whether it's going to get there or not and what it does once it does get there. So this allows us from getting scared out of positions or knowing when to be buying and knowing when to be reselling. And when we're buying again, what is our next target and what happens once it gets there? Well, when we get up here and we can see a doji hit the resistance level and sold off, what's that pretty much tell us? That signal itself is a reversal signal, and if they did it right at a major resistance level, makes it that much more compelling that we're going to the next target. Now, where is our next target? Well, it might not be any of the moving averages, but if we can use what everybody else is watching, like a support or resistance level, we just watch to see what happens once it gets down here. And when it does get down here, what type of signals do we have on this support level? And where are we stochastics-wise? Yes, this is being recorded. And so when it failed here and it supported here, where was our next target? Up here at the moving averages. So the reason that we want to have our targets is to know how long should we stay in a position and where is the place that we should start looking for sell signals. Now the T-line is a great benefactor, or we get benefit greatly from knowing what the, did I not show the moving averages? My stochastics are 12, 3, 3. And there's nothing set in stone on that other than I spent a couple evenings 40 some odd years ago just seeing where was the tops occurring, where were the bottoms occurring, and 12.33 when I kept tweaking it seemed to be the best one. The moving averages, the red is the 200-day simple moving average, the blue is the 50-day simple moving average, the gray is the 20-day simple moving average, and there might be even a 34 on here, but I usually don't have that on here. And the reason we have those moving averages is because that's where every major money manager in the world, those are the moving averages they use to make the decisions about their portfolio. The T-line is this black line. That's the 8 exponential moving average. And very simply stated, if you see a sell signal and a close below the T-line, you can stay short until you see a buy signal and a close back up above the T-line. Oh, well, I don't know what to do to help you there. But as you can see, there's one truism. You can stay short until you see a buy signal, either at a support level, and each time that reaches a support level, it's going to the next target. We have the benefit of seeing what happens once it gets there. A hammer signal in the oversold condition. What do we want to see the next day after a hammer signal? Bullish trading. Well, it wasn't there. That told us probably the 200 was not going to act as support. We're down here. Now we're waiting to see if they can close it above the T-line. So again, the T-line has truisms also. Again, if you see a buy signal and a candlestick a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. However, there's a truism that basically says that the further away you move from the T-line, the higher the probability it's going to come back and test it. So that makes, right now I'm working on when to take profits, just to show the 5 steps of high probability profit-taking areas. But if you're in an uptrend, remember what the Japanese rice traders have shown us graphically that is basic of human nature. Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So if we can start seeing there's exuberance coming into this uptrend, we're in the overbought condition, and we're that far away from the T-line, even though we don't have a sell signal on our daily chart, we probably want to go to our 10-minute chart and see if we're getting sell signals, because we already know we're way too far away from the T-line. Now you flip to your 10-minute chart. So these are just kind of simple little elements that tell you the further away you move from a moving average, the T line and or the 50, the higher the probability is they're going to come back and test it. We also have target potential targets based upon the patterns, such as our J-hook pattern. If we've got wave 1 and wave 2, we know wave 3 is usually going to be the same magnitude as wave 1. So where do we start looking for sell signals? When we get to the same magnitude as wave 1, when we get up here to that same level of wave 3, we're going to start seeing if that's where the selling is starting. And we can see that pretty clearly based upon what type of signals are occurring up there. The T-line is the 8 exponential moving average. So you put that on your chart just like you would a simple moving average. They'll either ask you whether you want SMA or EMA, and the T-line is the 8 EMA. The 8 exponential moving average, I made very good money with candlesticks trading off the moving averages, but when one of my previous private training students, Rick Sadler, showed me the T-line because he was experimenting with it, my profits went up tremendously from there. It was very simple. It kept you from being whipsawed in and out. So we also know that you can use the T-line using what we call the T-line crunch. Notice when it hit this resistance level, they couldn't close it back below the T-line, pushed it up through this resistance level. What was our next target? Up here at the 200-day moving average. So when we come up and we hit a resistance level and it fails, usually in the overbought condition, we can start taking profits. And this was always my biggest bugaboo, was I hated to sell and take a profit, because if I was lucky enough before candlesticks came along that I could get into a position that was moving in the direction I thought it, or everybody said it should, I didn't want to take profits, because what if this was the big one? What if this was the Dell of my lifetime? And I sold it here and it turned right around and took off without me. At least now I know where to take profits and where to buy back. This is what we call the bobble. As long as they can't really close it below the T-line, get ready for it to push through that level. And that's exactly the reason why we were in Scotty here over the last couple weeks, because it came up out of a big fry pan bottom, did the bobble in here. Notice what it couldn't do. It couldn't close back below the T-line, and they pushed it up through the 50 again. So, yeah, I don't know whether it's got to be individual audio, I guess, that people are having problems. So the question is, why would we be buying a stock that was in the overbought condition? Because we could see what type of pattern it was coming out of, the bobble. And if it confirmed, what did the bobble turn into? A J-hook pattern. And what type of pattern was this all coming out of? The fry pan bottom. So here was our first target. This was about a week and a half ago. So that was our option strategy. If we could figure out where our first target was, which was 40, we were buying the 36.5 calls and selling the 40s, which meant we had $1.35 in the trade, and if it went above 40, our $1.35 should go to $3.50. Well, that's exactly what happened. Oops, that's exactly what happened. We'll have to show it live. So anyways, and we can use the targets on any trading. If I'm trading soybeans and I see a buy signal, I'm watching to see what it does here. Then I'm watching to see if they can close it below the T-line. If they can't and they're doing a T-line crunch, now I know my next target is the 200. I watch to see what it does at that point. If it gets up to my target and we have a failure, that tells me exactly what's happening to this trend. They aren't breaking out. They're still in a downtrend. And so if I can see that we hit a target area, which was also this recent high, and then we start seeing selling with stochastics rolling over, I know if I was long, I should be out of this position. And what's my trend telling me? They're running into resistance. They're probably still in a downtrend. And you can do that same analysis with any of the anything that is a trading entity, which is how much does the space between the T-line and the price have to be, and when is it going to come back? Usually when you see your sell signal, and when you can see just on a general basis how far you are away from the T-line, and then all of a sudden it moves exuberantly away from the T-line. If it does that when your stochastics are up here in the overbought area, the probabilities are pretty good it's going to come back and test it. So if I see that little star doji up here and it opens lower the next day, we already have the simple rules of each of our signals, which says if we see a doji in the overbought condition and they open it lower, take profits. That indecision is telling us they're going to bring it back. Where are they going to bring it back to? Probably bring it back at least to the T-line. So take your profits, and at the T-line you can see whether it's going to do a J-hook pattern. You can buy back in, or if it doesn't support here or here, where do we know our next target should be? Down to the 200. And what happened when the Dow got to the 200? A doji, and then your big morning star signal with a close above the T-line. What did that tell us? Our uptrend was in progress until we saw a sell signal and a close back below the T-line. Again, this is not rocket science. This is just looking at the visual elements that the Japanese rice traders have provided for us, that human nature works the same way day, week after week, decade after decade, century after century. Human nature is not going to change. It hasn't changed for the last 400 years, and it's not going to change for the next 400 years. So we can see what's happening when it hits our targets. If we can see there's a trend channel developing, we can see what's happening when it comes back to that bottom of that trend channel. We can see buy signals. What becomes our next target? The top of the trend channel. We can see what's happening there, away from the T-line, little harami back to the T-line. Where are they bringing it back to? Our next target, the trend channel and the 200-day moving average. So all we're doing is just being able to identify where the support and resistance are and be able to see what type of information we're getting at those levels. So the NASDAQ was doing the same thing. When we had an uptrend, we got to the 50, what did we have? A shooting star. Where were our stochastics in the overbought area? The next day they open it lower. What's that tell us? We're heading back down. And we had our little kicker signal heading back up. Where was our target? Either the 50 or the 200-day moving average. Where was our stochastics? Probably telling us there was a little bit more upside. Oops. Okay, welcome back, Becky. And so here's our McMuffin, which is a morning star signal followed by our doji sandwich. The doji sandwich is a bullish day, a doji, and then another bullish day. This day, usually the candle of this candle is usually the same magnitude as this candle. And I say usually, high probability. And so basically we have a doji sandwich where the doji sandwiched in between these two. And we call it a morning star because you've got a morning star, we call it a McMuffin because we've got a morning star signal and a doji sandwich. Or if you shorten that, you've got a morning sandwich, which is usually a McMuffin. So where's our next target? To see what's going to happen when we get to the 50-day moving average. Now, we've got a big advantage knowing what should happen with each signal once we get to a resistance level. We have a doji, indecision. What do we know about the rule of the doji? The rule of the doji is the price is usually going to move in the direction of how they open it after a doji. So when they open up positive, we know they're probably going to be trading up positive, another doji sandwich, which tells us the 50-day moving average is not going to act as resistance. So we've got that preemptive analysis to be able to see immediately what's happening at those levels. Does the T-line work on intraday? Yes, it works on, all these charts are what you call fractal. You could be looking at a 1-minute chart, a 10-minute chart, a daily chart, weekly chart, or monthly chart. They'd all look exactly the same. So I trade the commodities during the middle part of the day, and I usually work off of my 10-minute chart. If I'm trading stocks, I'm usually trading off the daily charts. And so If we're in a downtrend and we see buy signals and a close above the T-line, where do you think our next target is? Right up here at the 50. Closed right there. So what's the prudent thing to do? Take your profits. What happens after that? If it opens lower, they're probably taking profits. You don't want to be in anymore. If they open higher, you can always buy right back in because it says that the 50 is not going to act as resistance. So that's what happened here is it pulled back. When were we buying? When we saw a buy signal and a close back up above the T-line. What was our upside target? Probably coming up here to test the 200-day moving average. We also have our classic patterns. The fry pan bottom. What do we expect coming out of a fry pan bottom? Strong price move. What do we expect after a strong price move? Some consolidation right back to the 50. Now what type of pattern do we have setting up? A J-hook pattern. So that's your classic because we know what to expect coming out of a fry pan bottom, a very strong price move. And we know what is a prerequisite for a J-hook pattern, a very strong price move. That means even if you miss this move, we can measure that our target for this move will be the same magnitude as this move right here. If we come up and we fail right at the 50-day moving average with a bearish engulfing signal, where do you think our next target is going to be? Probably coming back down to test that trend channel. So if we're watching a chart and we're getting right close to the resistance level, this was our kicker signal. It broke through the T-line, broke through this downtrending channel. Where's our target? The 50. When it gets there, we can see exactly what's happening. They failed at the 50. It's time to be out. When do we want to buy? When they can close it back up above the 50. They didn't do that till down here. So we stay out of the position until we can be buying back here. Now we know what our next target will be. If this is wave 1, this is wave 2, wave 3 will be about the same magnitude as wave 1. All right, so anyways, if we've got something where it looks like it's time to buy, what are our targets up here? Well, the first thing we can see is that there's probably a gap eventually that they're going to try to fill. Or you can throw anything on these charts that we know that other people will be watching, like throwing on the Fibonacci numbers to see if this level, this level, this level. We don't know if it's going to reverse at those, but if we see a reversal up here and it happens to be at this level, we know that's where the buyers started coming in. They came up through. This was time to sell. Why? Because we had a little hanging man sell where we were going to move back to the T-line. Was it going to be the T-line? Was it going to stop there? No, it might come all the way back to the 50. Where was it time to be buying again? When we saw a buy signal and a close back up above the T-line. It's time to take profits. Why are we buying here? Because the profit taking is over. Where's our next potential target? Up here at the 200-day moving average. So anyways, we've got a bunch more here, but some of these, again, were just recent. For example, ESL, here's our slow curve breakout. These are the most powerful or most profitable trades that I can do is seeing that slow curve, seeing it break out. Where was our target? The 50. Failed at the 50. Where do you think our next target was? We did this a few weeks ago, and today it closed almost on the 50. So how long do we stay short? Until we see a candlestick buy signal and a close back up above the T-line. Oh, I missed out on. Here's Sedge that we bought right here. Why? Because it was breaking out of our J-hook pattern. We knew that this wave and this wave should be approximately the same, and obviously this one has worked out. Now, does every trade we do work out? No, the confirmation was right here. If we can see a pattern setting up, what do we need to see? We need to see bullish confirmation. Why would we be buying a stock again that was in the overbought condition? Well, kind of the simple rule is if you see a candlestick buy signal, you're looking for it in the oversold condition. If you're looking for a breakout of a pattern, it's usually going to happen when you're in the overbought condition. So we made some very good money on this one. But the important factor was that it confirmed right here. Now, that's all a function of what the markets are doing, which direction the markets are going. We had that same setup in MLK. We were ready to buy this one because look what we had on the pullback. Notice the pullback was very indecisive. Then we had the doji gap up, our best friend. Then we had another doji. And what do we know about the rule of the doji? That yeah, we'll be looking at all the stocks here in a minute. I'll go to the live charts. So we're getting ready for this one tomorrow, PACB. What happens coming out of a fry pan bottom? They break it out. What's happening right now? We're right back at the top of this fry pan bottom. We're just about ready to break out. So if this opens positive tomorrow, you want to be buying because that tells us there's probably going to be a fairly good pop on this one. Okay, so that's our targets. Now, the reason we're doing the targets, we're supposed to be doing a special on this. I guess so. Let's put we're doing a special for those of you that apparently aren't members yet, but would love to be. I think this is the special, which is basically, I forget what price. This was $147 video that training that we did on breakouts. Well, we're going to do it for 17 bucks. And does that also include 30 days free trial, Becky? The website? Anyways. Okay. And I think that might also include a 30-day free trial to the website. The little green line is what we call the 3T line. And that's a whole different training where you use the 3T to confirm a reversal and to confirm your existing uptrend or that you're continuing your uptrend. So if there's any questions, I'll take them here real quick. T line is an indicator. Price is either above or below it. Okay, so you were answering somebody's question up here. In a second. That's T-line does work intraday, yes. And do you place any emphasis whatsoever on the first 30 minutes opening range of an index's upon the market? Lowry, yes. There's always the old adages that the amateurs buy in the first hour, the pros buy later. And the answer to that is I don't care who's buying or selling. If the chart is telling me it's time to be buying, I want to be buying. Oh, I guess I don't know what the moving averages are based on. I'm sure it must be the close. What time frame do you use for indices? All depends on what you're trading. If you're intraday trading, you might use a 5-minute, 10-minute, 30-minute combination. Or if you're trading real fast, I used to trade the E-minis on a 1-minute, 3-minute, 10-minute combination. How do you have a quick way of filtering stocks for 10,000 or a dozen in a few clicks? Yes. Once you put in the formulas, and our formulas, Don, are all over now. They're in Ninja Trader, they're in TradeStation, Thinkorswim. Metastock has the formulas for finding the high profit trades. And if I'm looking for, I can go through the scans and find the best trades for the next day in probably less than 5 to 7 minutes. If you're new at it and you're still working at it, it'll be less than 20 minutes each afternoon. Do you scan all stocks? Do you have a preferred list? Jay Bing, because I can scan everything so quickly, I scan for all of them. And the reason I don't scan for a preferred list, now you can scan for your own preferred list. If you're an options trader, obviously you only want to scan for option stocks. If you want to scan for the stocks that are the biggies, like the Netflix, the Amazons, Apples, yeah, you can just scan just for those that universe. But it takes me less than 5 minutes each day to go through and figure out once all you have to do is refresh all your scans, and they'll with all the formulas set up, they'll bring up the charts that look the best. Who can I contact for scanners for brokers? Usually the broker. Or for brokers? Oh, yeah, unless we have somebody like TradeStation or Thinkorswim, they have all our scans there already. Okay, let's do this. Let's take a 2-minute break. That way I can close the screens and bring up the live screens. Then if you, Jay Bing, can somebody help Jay Bing? What's it called over there? I'm sure it's candlesticks. Why don't I trade the E-minis anymore? Because I discovered that I was trading those, and at the end of the day, I was trying to make an extra $200 or $300 on the last final trade, and it was back in my younger days. And when I was done at the end of the day, I felt like a wet dish rag, and I discovered I made much more money more comfortably, paying more attention to my big money, watching the daily charts. Garcia, I've done there's a video on our site that has them quantified. And the first ones I can think of is your best friend, the doji in the oversold area, followed by a gap up. The left-right combo, which is a doji followed by a bullish engulfing signal. A fry pan bottom breakout. Let's see. I think Jim's putting some of the links for some of the formulas on our the kicker signal. Yes, the kicker signal is your strongest one. Okay, now we're down to a minute, so we're going to take a 1-minute break, and we'll be right back. Still spinning. All right. Okay, so real quick, we can see what's happening in the market. We knew that the last 3 days they were buying with the anticipation of what the Feds were going to be doing. And then our warning and our comments were, just be careful. But now that the news is out, or that's over, what's the next expectation? As we can see, they sold it off. What's that telling us about our chart channel here, our chart trend? They weren't going up through the resistance level. What's that tell us? We're probably still in this trend channel. That same scenario over here in the NASDAQ. Which way are we moving right now? We're moving sideways. So what is the video class on? Oh, the video is what we were doing kind of in a Cliff Note version, Charles, of the targets. Goes into a lot more detail. What you were seeing is some of the charts in that video that I was just kind of skipping through to find ones that were to make points on. And we're going to kind of add to that as we go through. HM, if you're having problems finding them, email Abraham at candlestickforum.com, and he can give you the link to at least to their sessions, or what the link is to get to the right place. So right now, our analysis is we don't think this market's going anywhere, going sideways. So does that mean we won't make any money? Definitely not. As somebody said earlier, how long does it take to scan through 10,000 charts? It takes a few minutes. So we can scan both for longs and shorts, which we'll kind of go through. So, and the one I wanted to come right back to was Scotty, to show why the patterns work so effectively. Because notice what we had right here. That was our bobble. We were buying the calls right here, the 36 and a halves and sell in the 40s because we knew we only had about, I think we started buying Thursday. We knew we had less than a week to expiration. That it was logical that paying $1.35 for that spread versus buying the calls outright would go to 350 if it closed above 40 tomorrow, and going from $1.35 to 350, that was a decent rate of return. Now I think the microphone's on. So this is a bobble, a T-line crunch, which usually break out to new high side. Yes, the probabilities are that if you see something come up to a resistance level and you start taking profits because it's not going through, but you also witness that they can't close back below the T-line, notice how the T-line crunch is pushing you back up through the resistance level. And if it starts trading positive, telling us the 50 is not acting as resistance, what type of pattern does this bobble create? It creates our J-hook pattern. Wave 1, wave 2, going into wave 3. So this is where you can set up very logical option strategies. We were buying the Decembers, the 36.50s, selling the 40s for $1.35, which we sold out yesterday at $3.30. We weren't going to wait a few more days just to make another 20 cents. But at the same time, we also knew we were only 5-6 trading days away from the December, but how long was it going to take that if they went up and reached our target, which was still fairly substantial, a good percentage away, same magnitude as this move? It might take 2 or 3 weeks to get there. So we were also buying the January 40s, I think at about 370. So obviously they have worked out extremely well because we didn't buy all Decembers. We kind of mixed a spread with buying calls outright. These patterns work on Forex charts. The only thing that you're not going to have on a Forex chart are these gaps because of the continuous trading. But you're going to see the other signals, the dojis, the hammers, that sort of thing. All right, so that same scenario worked when we were going after Sedge. That we had a J-hook bobble setting up that if it opened positive, we wanted to be buying instantly, which we did. Because if it broke out through the 50 and this level, what was the magnitude of our expected move? Same as this one right here because of the J-hook pattern. Obviously, this one has worked out very well also. Now, do they all work out? That's where your confirmation has to come into play. We were going to go after MNK today had it opened positive. Because what would happen if it opened positive? We'd have a doji sandwich in progress. So this candle and today's candle would have been up here telling us they broke out. However, what happened? They sold it off. That told us we weren't supposed to be in that trade. We didn't execute. Does Scotty have a greater chance tomorrow of doing a doji sandwich or reversing? Because I would guess that Scotty's about, well, what did we see today? We saw indecision between the bulls and the bears. So we have a very simple, that's another major element of candlesticks, that there's very simple logic to where you place your stops, either to enter a trade or exit a trade. What do we know about a doji, especially a doji in the overbought condition? If they open it lower, more than likely the profit taking has started. Where are they capable of bringing it back to? Back to the T-line, which tomorrow might be up here at the 200. And what do we know about a resistance level? If a resistance level is breached, they'll come back and test it as support. So where do you put your stop? We've got our stop right here at today's low. If they have enough selling pressure to bring it back down below today's low, you want to be out of that position. Now, that puts us in a trading strategy that says we may not be buying at the absolute bottom and we may not be selling at the absolute top, but we're getting that fat part in the big trades And if you can do that with a high consistency, your compounding effect will be way more than trying to figure out where the absolute bottom and where the absolute top of a trend is. When you give stock recommendations, do you also give the option? Julia, we have Julio, we have a options trading room that's separate from our main room, and that's, again, we set that up because people in the main room are wanting to learn the signals and patterns for trading stocks, and those that are wanting to trade options, instead of having that conversation back and forth or on top of each other, we've got a separate service where we've got an option trading room. We've usually got 40, 50 traders in there, and all pretty good traders. And I'll put out a stock recommendation or an option trade recommendation, which may be like we did on Scotty, that you buy the December spreads and you buy the January calls outright. Right now, probably tonight, I will be putting a recommendation on, we've been short WDC, and we'll probably reiterate the short that if it opens lower tomorrow, kind of on this dumpling top, that they could be breaking this down into wave 3, and what would be our next target? Probably this channel right here, taking you all the way down into the 50 area. So yes, we do put out recommendations. I put out 2 or 3 stock recommendations every day, and I tell people it's not so that people have recommendations. So you could go look at those charts, and I try to do videos, 2 or 3 minute videos each night with the what the market's doing and why we're recommending stocks, the reasons for that recommendation. So you're in a constant learning process of why those positions are being recommended. Did we sell? I closed out a little bit of sedge today when it came back down through the open. My second sell stop for the other half of the position was at yesterday's close. But if they had enough selling strength to bring it down through there, they were probably bringing it back down, doing some profit taking. Do you put your stops at the exact low? No, just a few cents lower, maybe a few pennies lower. So you don't, as soon as it closes above the T line, but you wait for confirmation. Yes. Yep. If I saw this buy signal or these buy signals in here, I was probably buying on this day. Yeah. What something's doing after hours has absolutely nothing to do. That could be trading on 1,500 shares for the night, and the opening volume may be 400,000. So 1,500 shares isn't going to tell you what the price is actually doing. Okay, let me take a look at some of the others. This one, I mean, this is why not only is the magnitude of a move predictable, coming out of a fry pan bottom, but the timing is predictable. This is where we would be buying, breaking out through this level. So it always comes back to, why would you be buying a stock that's in an overbought condition? Again, we're buying the signals when they're in the oversold condition. We're buying the patterns when they're breaking out to the upside. We're watching RLYP because it's in the bobble. Now, it came up and failed today, but it didn't close below the T line. We're still watching to see when it closes above the T line to see if we've got another wave of this magnitude breaking out through the 200. And AVXL, same scenario. Pretty much got the T-line crunch going on here. If you're long, you stay long. If you're looking to buy, you buy when you see it close above the T-line. And we've been in OPTH. Now, this is the reason the T-line is very effective for allowing you to sleep well at night. Because ever since the J-hook pattern, notice what it hasn't been able to do. Close back below the T-line. Right there, it closed below the T-line. But what was the trajectory of this trend? This trend had been trading above the T-line now for months, So we give it an extra day to see whether that was just a sell-off day and it happened to close below the T-line. The next day, it needed to close back up above the T-line. If it had opened lower and started trading down, we'd have closed out the position. When would we have bought back? If we would have bought back, when it closed back up above the T-line. So this is the type of how you want to kind of, how you want to massage your portfolio. But if you've got this type of trend going in a stock, obviously you don't have to pay too much attention until that very simple analysis that you see a sell signal and a close back below the T-line. So this one you hang on to. If you can get your portfolio set up that now you've got 4 or 5 of these and your portfolio is 8 or 10, that means you don't have to pay attention to 4 or 5 of them. You're concentrating more on the other ones. What is the significance of the green line? The green line is the 3T. As long as the 3T doesn't come back down below the T line, that tells you your uptrend is probably still in progress also. Then also, when you move further away from the T line, then the 3T line becomes that much more significant. The waves, I only count 3 waves because I'm not going to be in a position, Bill, any longer than wave 1, wave 2, wave 3. So if this is wave 1 and this is wave 2 and this is wave 3, and if we start seeing sell signals and take profits, now this may become wave 1, wave 2, wave 3. We're not using Elliott wave or anything like that. We're just counting because prices do not go straight up or straight down. They usually move in waves. How do you figure out where to put your stops on an option contract, percentage or cents? Rich, you're not buying the option. You're buying the stock chart. The option is just a method for buying that stock. So if I'm analyzing a stock and I've bought the calls, when do I sell the calls? When the stock chart tells me it's time to be out of that trade. So you're not buying it based upon the price of the options. Yeah, so on this day right here, as I was saying, if it closed below the T line, I better not see it start trading off. In this case, they opened it, bobbled it, and started bringing it back up. So the reason I gave it that extra leeway is because look what it had done for the last 3 months. It pretty much had stayed above the T line. I'll give it one more day. Yeah, and if I had sold it here, then I'd be buying it right back here again because it was back up above the T line. Oh, we got a bunch of these yet to go through. And these are the ones that we're looking at right now, the ones that we've been following and are probably trading. Here's wave 1. Here's kind of a slow curve. So we're still long, HIMX. Because we can see that it hasn't been able to close below the T line. So if we can see patterns like we saw in Scotty with the bobble, then it becomes pretty easy to find stocks that have that same type of setup, because that essentially tells us, or is essentially revealing, that investor sentiment works the same way time after time. That's why these patterns are identifiable. It's because human nature works the same way. We're going to be buying this one on positive trading tomorrow because essentially you've got that slow curve. Now you've got kind of a doji sandwich that broke through the 50 resistance level, and you've got a J-hook pattern setting up kind of on this bobble type situation. So this makes for a high probability trade setup if it opens positive. We know where our next target could possibly be, all the way up here to the 200-day moving average. That would be a significant, I guess, about almost a, let's see, 7 to 1050. That'd be a 50% move. We also know that for the success of this pattern, what should it be doing? It should be moving up from here. So where would we set our stop? We wouldn't want to see it close back below the T line. That would tell me it didn't break out. It failed right here at the 50 again. Close it out. You might get back in it later, but you need another buy signal. And a lot of these are the ones that are being pointed out in the chat rooms every day. Same scenario on SIEN. a bobble. Failed at the 50. Came back. Now it's done a little scoop type pattern, and they've broken up through the 50. There's wave 1. There's wave 2, which would be filling this gap. And then there's also a gap up here. So those are the targets. Now, is it going to get there? If we're buying based on a candlestick buy signal, we can see what our potential might be, but we're going to sell based on a candlestick sell signals. I usually only follow 10 stocks or so, but you can also, and that's the advantage of candlesticks, is that you're not finding 10 stocks that are good for your portfolio. You're probably looking at 30 or 40 good stocks, and you've got the opportunity to cultivate them to the best ones that you want to have in your portfolio. What are the settings for Thinkorswim? Oh, Scott, I don't know what that means. You can put the settings, any of the charting services, whether you're using E-Trade or any of them, you can put the same formulas that from any chart into those. What is the typical length of holding in your? That's up to each individual, Chuck. Now, I'm a swing trader, so my trades usually last for anywhere from 2 to 10 trading days. I trade commodities, and we haven't even gotten, or won't even have time to get those. But right now, we're short. There's a service that when I put on a trade in my account, the trade goes in everybody else's account. Right now, we're short coffee because we had that big evening star signal, and we broke this kind of downtrending channel. We're expecting at least to come back to this level. I'm also short lean hogs because we had that sell signal up here, broke this channel, kind of gapped down today. First target is right here. Second target is wave 1, wave 2, wave 3 could be down here somewhere, which could also coincide with this downtrending channel. The time frame is up to each individual. In our chat room, we've got scalpers, day traders, swing traders, and long-term investors. You can analyze a chart based upon what it's doing on a daily basis, weekly basis, or a 1 minute, 3 minute, 10-minute combination. Let's see what else we got here. EXAS was one that we recommended today because look at the slow curve coming out, breaking out, and we'll still be a buyer of this one on positive trading tomorrow because what will we have? We'll have a doji sandwich that's still breaking us out. And where's our targets on this one? First target is coming up here to where it gapped down. If it breaks through there, we can kill them all the way up and fill the gap. Basic 100% upside. I don't trade commodity options only because I just don't have time to keep track of all of them. I trade commodities because the charts are, I can do that very quickly. WABA, there's that J-hook pattern. And how did the J-hook pattern start? With that bullish Rami gap up. Bison. I'm just going to kind of brush through some of these just because they've got good-looking charts. This is where you kind of observe the obvious. The obvious is you're in an uptrend. You're in a trend channel. And they bounced, in this case, back up above the T-line off the 20. Over here, they bounced off the 50. Where's the next target? Probably the top of this channel. That's still a good 25% upside. Is it imagining that most of your trades are with price below the 200? That I don't know, and I don't care. A lot of people say, well, they say not to buy anything until it's above the 50. No, it may be a big profit going back up to the 50. So we're not buying or selling the moving averages. We're buying price. And so if you took everything else off the chart, you'd still be buying what the patterns and the signals were telling you. Everything else that we add onto it is just kind of confirming that you're in the right place at the right time. Eyes has been pointed out because there's a big fry pan bottom. And where is it starting to break out? Right where this fry pan bottom started. So where's your next upside potential? Up here at the 200-day moving average. If you're looking at the S&P, the S&P is just like the Dow. I think you're going to be in a sideways mode. And I don't think there is a Santa Claus rally. Now, that's another thing that you have as an advantage using candlesticks is whatever you think the adages are. The trend is your friend, the Santa Claus rally, all those type of things. You can see exactly what's going on. You can see what everybody else might be anticipating and whether it's working or not. Robert, I think the options room is approximately $70 a month. I think it's a one-time fee. Again, if you'll get with Abraham at Candlesticks Forum, Jim, you want to type in Abraham at candlestickforum.com, he can get you all the information. And we don't have the options room set up to have another service to charge everybody. It was done more as an extra service so that all the option conversation wasn't boggling the minds of people that are still just trying to learn how to use candlesticks effectively. If they're option traders, they can now use the analysis candlesticks and also have some people to bounce good ideas off of to what strategies, which option strategies to use on specific signals and price move or patterns. Neil, no, I put out probably about one option trade every week, and I put out 2 or 3 stock picks every night. And now those stock picks, if we think the market's up, it might be 3 long picks. If we think the market's heading down, it might be 3 down picks. If we think the market's moving sideways, we might be recommending 2 longs and 2 shorts, depending on how the market opens the next day. Is there any reason to quit trading because of Christmas and New Year's? No, there's still, I've made tons of money. I've even made tons of money the day after Thanksgiving when nobody's around because there's always something moving out there. Do you get into and out of the same option? Very rarely, but I closed out. Which one? I closed out these puts yesterday because the market was acting strong. We had a bullish harami trading up, and it looked like the market could break out. So I closed out the puts. But today we saw the market not acting strong, and we could identify. I did this prematurely because when should you close out a put position? When you see a buy signal and a close above the T-line. So I closed it out yesterday, and I bought back puts again today because this pattern was still continuing. Now, do I always hit every single trade absolutely right? Absolutely not. There'll be a lot of times where I put on a trade and have to take it right back off. Put on a trade again because the reason I put it on in the first place was that everything was setting up correctly and have to take it right back off again. Then the third time it sets up, the same parameters are still there. Now the buying has started, and it may be the third time that I get in. So if I make 28% on that move, but I lost 3% on the first entry, lost 4% on the second entry, so I netted 21% instead of 28%. But again, that's the cost of doing business, and that's where the knowing when to get in and out of a position is very advantageous using candlesticks because, as you know, every money manager tells you to cut your losses short and let your profits run. I've never heard a single one of them tell you how you cut your losses short and let your profits run. Sheila, we will probably, right after the first of the year, we will probably be doing an online training, which usually lasts for 2 full days. And that's where we go right from A through Z on candlesticks on how to identifying and how to use the signals and the confirming indicators, how to do successful entries to keep you out of bad trades, how to set your stop losses, how to take profits, how to manage your money so that you don't have your emotions involved. That was the biggest problem I had when I was investing. Is I was the worst investor in the world because I would let my emotions get in the way. Using candlesticks, you know what the probabilities are, so you know when to be in and when to be out of that situation. Let's see. I'm seeing what else looks gap up. Notice it wasn't any real clean signal, but the message was that they wanted to get back into this position with great enthusiasm. So when do you buy this? When you can see that yesterday's profit taking was over, which was very evident today. This one can be bought because you've had a huge gap up. I would think now the 200 is your next target. That was ADXS. And I'm just trying to pick out some here. We know that the gold stocks are getting hit right now. Nugget, somebody asked today, is this kicker signal worth anything? Well, yes, the kicker signal where it opened here and closed here and then gapped down and went the opposite direction, that tells us they're rolling gold over. So a lot of the gold stocks, had kicker signals in it. This is one that you probably want to be going short on. SA or GG. Want to be going short on this one, that this is wave 1, wave 2, rolling over, going into wave 3. What is the significance of a weak close in that stock? Nothing. Remember, every single day isn't going to be a big, strong move. Look where your stochastics are. And this is where I was telling in the chat room today, you don't look at each individual day as the trend. This has a bunch of dojis, closed at the T-line, closed above the T-line in the 50, traded positive today. We're in an uptrend. And what would I be doing with this one? If it opened lower and trading lower, I'd probably close it out. But I'd be ready to buy it back if it showed it was supporting on the T-line and coming back up. If it opens positive tomorrow, what did that tell us about today's trading? That was pretty much profit taking. I mean, it's already moved up a good percentage, up 15%. Yeah, you're going to see a little bit of profit taking. Each day of a trend is not going to be the movement of that trend. There's going to be ups and down movements. We're buying the price trend. Larry, I'm usually trading off the monthlies. Now, I know a lot of people in our chat rooms trade the weeklies. I just don't have time with all the things that I do during the day to watch the weeklies that closely. So I trade the monthlies, and that's usually what my recommendations are. Now, we're not trying to recommend things where you just go and do it. If we're recommending shorting or buying puts on WDC, some people might want to be buying way out of the monies. It all depends on each person's nature. Some might be buying at the monies. Some might be, and when we teach people when to put spreads on, right now we wouldn't be putting spreads on the January options because it's too far out. And so let me take a look at a few more. The ones that we're short in, COLM, ever since the evening star signal, notice what it hasn't been able to do, close back up above the T-line. I saw that U.S. Steel also was failing with a kind of a little gap down, telling me that they're probably coming down to the this trend channel. And we've been short, not a big position, but some on QLYS ever since the sell signal's up here and they've gapped down. Notice what they did when they got below the 50. They came up, failed at the 50, rolling over again, so you've got a bearish J-hook pattern. Where's the next likely target that everybody can see? Right down here at the bottom at this this range. And showing this one to show an example of when they fail. Here there was a possibility that if you've covered your short, you reshorted it right here. And that's kind of to illustrate the fact that if this was a 10-point move, and I only got 8 points out of that move because I closed it out when I thought it wasn't looking good, at least I know those 8 points were in the direction that I wanted to be in versus holding on to something that I was hoping that would keep going this way, but was showing otherwise. Okay, I guess, some of the biggies, like Apple, ever since it kind of broke the 50 with a doji gap down, they haven't been able to take it back up at all. Amazon has kind of a little scoop pattern. Our suggestion right now is you stay long on this one as long as they don't close it below the T line. And Netflix, same scenario. It opened up above the T line today and closed back at the T line. Makes it very simple. To stay long, it has to open positive and trade positive doing a J-hook. If it opens lower, it tells us this downtrending channel is still in progress. They're probably coming back to take a look at that range or take a look at the 50 again. How do you scan for stocks? All my formulas are in the different softwares, and all you do is punch a refresh button, and it finds the formulas and the signals and patterns. Again, I can go through 10,000 charts, and within 5 minutes, I can have the best setups for the next day. Okay, so before we do individual stocks, which when we do that, I tell Jim to do the double line, then you put in your the symbol you want to have looked at. So if there's any general questions, Neil, I think for 17 bucks you get the video on how to do the targets, and then I think you get a 30-day free trial to our website, which again, Monday nights we do for members, Thursday nights we do like this for everybody. Usually about once a week we will do training sessions. You can get the training sessions on video at a discount being a member. But we also do the training sessions live, so if you have questions. So last week we did, I think we did some of the targets. I forget what the other ones were. But we show how to do the stop losses, entry and exit strategies, when to take profits, that sort of thing. All right, Jim, I guess you better do the double line. There you go. We're going to try to keep everybody's request to 1 since we're already late. And Jim, do the second double line here in a couple seconds. Wow. NVDA. This one I would have closed out today with a closing below the T line. This is one of your strongest reversal signals, which is a left-right combo, which is a doji followed by a bearish engulfing signal. And notice the direction your stochastics are heading down. So you've had a bearish harami, a bearish harami. You can see the trajectory is now failing. You've closed below the T line with a left-right combo. I would probably have been closing it out. If I didn't, there's only one way to stay in this one. You have to see it open positive and trade positive. If it starts trading lower, you close out the position. Kendai, we've been watching to see if it was going to break this downtrending channel, which it did. This one you can be buying because notice what happened as it hit the 50-day moving average and the 200. A bullish harami. And what's a bullish harami tell us? The selling has stopped. You can be buying this one going into wave 3. IBM, I would have closed this one out because what was it telling us? We could already see you're in a downtrend. Now we've had another sell signal closing below the T line. I'd be out of IBM. ConocoPhillips, same scenario. At this point, I'd be ready to go short if it opens weaker tomorrow because now you've got kind of that bearish scoop pattern or bearish J-hook pattern. FNSR, this is what we call 45 degree. When you have a strong move like that, expect a 45 degree, and it's very simple. All you do is stay long until you see a candlestick sell signal and a close below the T line. That was our same advice today on Kroger. People in the chat room were asking about. We're still in this 45 degree. Now, will it come back and test the T line? We had a doji. Now we've got an evening star. I'd probably use the low of the doji as a stop. If it traded back below there, it's coming back to test the T line. Is it going to hold there? Have no idea, but why take the risk? The worst case scenario is if it comes down, hits the T line, and bounces back up, you can always buy it back. Let's see. JRJC. This one you stay long. Once again, I would use a close below this level as a stop. As long as it stays above that, you're probably going to be in a 45 degree. Gold did a gapper down or a kicker down. It's not no, this is not a morning star. This is a kind of a bearish scoop pattern, but you had a little kicker type signal. I'll show you a morning star here as soon as I see one. WPZ, another one that never confirmed. You had your buy signal and a close above the T line, so it needed to open positive. It didn't. You shouldn't be in this one, and you could probably be ready to go short on this one if it opens lower. Apache, same scenario. Stay short on this one because they've never been able to close it back up above the T line. And HDB, let's see, did I forget to answer somebody's questions? For 17 bucks, you get, I think, $140 video, $147 video, and a 30-day free trial. Becky, do you have the details on that? HDB, that's a toughie. You're in an uptrend, but you really didn't have a reversal signal, which tells me that the first time you start hitting resistance, you better watch for selling, which in this case it looks like it's trying to do. If you're long, it has to open positive tomorrow to stay in it. If it opens lower, you're probably coming back to test the T-line, which means the upside force isn't that strong. TFSL, another one where you can see, observe the obvious, which is you've been in a steady uptrend. This one, you just stay long as it stays above the T-line. It doesn't look like a very prolific mover. Now, it's not a big percentage move, but it's still in an uptrend. That one, Susan, doesn't come up on this chart service for some reason. EROS, nothing here. I wouldn't be long or short. That's not showing us anything. Now, ERII, that's got a nice little fry pan bottom or bottoming action. I'd be buying this one on positive trading tomorrow. SUNY did get to its first target, to the 50-day moving average coming out of this fry pan bottom, and it went through the 50. Notice what it did today. It used the 50 as support. I would still use the 50 as a stop. If it closes back below there, then it's going to do a bobble, which means it's probably coming back to test the T-line, which means it's not going to have any upside for the next few days. Window doesn't seem to be coming up. EKSO isn't coming up. Is that VLTC? This one, I think it did a bullish engulfing signal on the other charts. You can buy this one if it starts coming up through the 50. But it's not one of your best looking charts. If I had my druthers, I wouldn't be trading this one. Under Armour, just stay short. It's never been able to get back up above the T line. VRX is a very simple one. Once you saw the buy signal, and again, this is where you use the 3T. Notice how the 3T also came up above the T line and hasn't been able to close back below the T line. So right now, I would suspect they're going to come back and test the 50 to see if it's going to act as support, but I would stay long as this one stays above the T line. Raytheon did a shooting star today. It's still in an uptrend, hasn't closed below the T line, but if it closed below the T line after that shooting star, doji, and lots of little indecision, I'd close out the position and move someplace else. Tata, nothing here. It needed to open positive and trade positive, confirming they were staying above the T line. They did a bearish harami, which tells me if they open this lower, you're still in a downtrend. 2U, you're right at the 200. Makes this very simple. You did a doji. Rule of the doji is they're going to move it in the direction of how they open it. If they open this lower tomorrow, take your profits, because at best you're going to be in a bobble for a couple of days. And if it supports on the T line and comes back up, you can always buy it back, coming back up through the 200. Oh, what did I just do? Google L. Google L has to open positive and trade positive. If it opens lower, you can see what the trajectory is. It's gone flat, which is basically the same thing the market has done. We did ERII, whoops, SENT. Stay short. Oh, on the other charts, it wasn't a bearish engulfing. On this one, it is. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. So this one is indicating that when they took it up big and brought it right back down big, I would suspect your next target, because they're not coming back up above the T line, is back down here to the 200-day moving average. We did Conoco, Walgreens. That's not right. WAG should be a symbol. I thought that was Walgreens. The bear markets, yeah, right now, if you were short this, notice how far away it moved from the T line and came all the way back. If you were short, probably should have covered today. You can always re-short it on weakness, or you can start going long if they open this and start trading up above the T line. Goog itself closed right on the T line. So if it opens lower, you've lost your trajectory. I would suspect you're going to move sideways, waiting for the 50-day moving average to catch up. And cyber, this is why if you were buying, you watch to see what it does when it got to the first target, which was the 50 and this level. Makes this very simple. If it opens lower tomorrow, you close out the position. You can always buy it back if it comes up through the 50. Bank of America, not a real prolific trader, just won't move. No matter, I mean, this is not a very big percentage mover. And right now, I probably wouldn't be long or short this stock. Macy's, stay short. Nothing here. Even though you're in the oversold area, you stay short until you see a buy signal and a close back up above the T line. NKW, that's not working. Okay, try EKSO. That's just not coming up. Micron closed back below the T line. So I probably wouldn't be long, and I probably wouldn't be short this one. You can see you're in a downtrending channel. It's just not a good looking chart. Apple, you stay short. Light, Light, you can stay long. You've got wave 1, wave 2, bullish Harami going into wave 3. Makes this one simple. If it came back down through today's open, I would come out of it and wait to see what it does at the T line. If it opens positive, you're going to be in that, again, a potential bullish doji sandwich. Abbott, another one that wouldn't be long or short. Absolutely no movement to it. Does your company have a trading platform? If not, who do you like? Sheila, that's not a question for me. And that's the type of thing I tell people to ask everybody in the chat room to see which ones. Now I use, for my little trading account, I use Thinkorswim because I can trade stock, commodities, options all out of one account. But I've got accounts at Fidelity. I've got accounts at Schwab, which are less active. But that's a question you ask people in the chat room because then you'll get opinions of people actually using them all across the board. Russell 2000 didn't do anything to tell us that they were coming back up. You can see there's a spreading action going on, which is the opposite of a wedge. So spreading is if you can see a 0.1 and 0.2 below 0.1, 0.3 above 0.1, and well, not quite here. But if you can see this spreading, that means there's going to be a strong whipsaw one way or the other from here. Ford didn't do anything today. It had the potential that if it opened positive, you could be buying this. If you bought it the other day on this signal, this is a morning star signal. Big down day, a day of indecision, and the third day closes more than halfway up that candle. That's a morning star signal. There's a morning star signal down here. Big down day, day of indecision. And the strength of a morning star signal is, remember, our best friend is the doji gap up. So if that's part of that morning star signal, that tells you there's usually a very strong price move ready to follow. Here's your best friend to the downside, a doji gap down. Told you stay short until you see a candlestick buy signal and a close back up above the T line. The Citigroup will follow way up after. Will follow way up after. Right now, remember, a lot of people were asking before the rate change, what did I think that was going to do to the market, which I had no idea. I still would have no idea. But the advantage of using the candlestick charts is they tell you what everybody thinks is happening based upon that information. So I want to trade that information, not speculate on what something might do. JNW, yes. JWN, Nordstrom, that's a good looking short. That's your big dumpling top. Oh. You know you're in a downtrend. So if they break this down, they could break it down to the bottom of this trend, taking it down into the 30s. Kroger, the only thing I can tell you is as long as it stays above the T line, you're in an uptrend. So you have to decide, do I want to be buying here? Because I've already had a 10% move. And it's all on the basis of what time frame you want to be trading. If you're trading this one, no, you wouldn't be trading this one. If you're looking to buy this for longer term, as you can see in the past, this one has had a nice, big, steady uptrend for quite a while. If I can make it even smaller yet. Oops, made it too small. A big uptrend. Now you have consolidation. Where's the next likely target? Well, if this is your trend channel, at least probably up here, and then probably going 45 degree from there. Oops, I didn't scroll fast enough. Let's move back to oh, 5.9. And the same scenario, as long as it stays above the T line. Now, if it opened lower, if I was trading it, I'd probably close it out and then see what it does back at the T line. But when it broke out, this is what we call the 45 degree. You just stay long until you see a sell signal. They're okay. Yeah, if well, now that I've mentioned it, Walgreens is now WBA. Since I mentioned it, I goofed up. If you want a 30-day free trial, just email Abraham and tell him that I said you could get a 30-day free trial. Walgreens, I wouldn't be long or short this one. There's nothing to that chart. And SPHS, this one has good potential. There's your bullish Harami right smack dab on the 50. Now you have a close above the T line. If you're buying this one, just make sure the volume is hefty on this one. But if you're buying this one, your next target is to make sure it gets through this little downtrending channel. Wells Fargo needed to break out through this level, kind of failed there. If this opened lower tomorrow and I was long, I'd close it out because that tells me I'm back in the trend channel. If it needs to open positive and trade positive to stay in it. Tazar, another one that I wouldn't be long or short. You're in the oversold area and you're not really seeing any buying and you're not above the T line. I'd be someplace else. Apple, we did. You just stay short on this one. You had a bearish left-right combo. You've broken this level. More than likely, this is your next target. See what it does there. If it breaches that, now your next target is down here in the low 90s. CXRS. Oh, did I do that wrong? CXRS. Whoops. That doesn't seem to be working. You're probably looking at CXRX, which right now it needed to open positive today to be a good trade. If you're long, it has to open positive because it closed right on the T line today. If it opens lower, close it out because you can see that it's junky. LPTH, another one where if it opens lower, more than likely after seeing a bearish engulfing, and every time they open it up, they're starting to sell it off. If it opened lower tomorrow, I'd close it out and then just wait to see what it does back here at the T line. Disney's been in trouble here for a little bit. Well, they did pop it back up. But same scenario on Disney. If they start trading this lower, you want to close it out. There's no direction to it. Okay, with that, everybody, thank you for showing up tonight. And we'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.